Hi, good week to all. This is Kelvin here. Welcome to this week of latest weekly technical outlook on the major stock indices for the for the new month of 3rd of May to 7th of May. So I'll be covering the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 30 stock indices in terms of its technical trend, weekly trend, and as well as key levels to watch. So before we start, let's take a look at the disclaimer slides first. All right. So before we jump into the technical picture of the various major stock indices, let's have a quick recap on their weekly performance as well as its prior week. So we could see the last week of April as we headed into the dreaded month of May. So why is May so dreaded? Still remember this HO saying that we start to hear in most financial media, sell in May and go away. Later I'll share you more interesting stats on this supposedly backed omen. Alright, so pretty much of a consolidation week last week for the major US stock indices. The SPX 500 almost unchanged, the Nasdaq 100 negative 0.58, Dow Jones negative 0.5, Russell 2000 negative 0.24, versus its prior 4 week average of 1.27%, 1.82, 0.73, and 0.57. So it's more of a consolidation week on the US stock indices. The Hong Kong index, which is pretty much linked to the China stock market, so pretty much underperformed again last week at negative 1.22%, negative 1.834%. So one of the reason why of its underperformance is perhaps two reasons, due to this negative news flow surrounding one of these major Chinese asset manager, which is China Huarong. It is impending financial result that has been keep on delaying due to this ongoing bad debt fiasco in this asset manager situation. But nevertheless, we start to hear that the Chinese government is actually ready to stand by to actually buy up these bad debts. That's actually depends on how the news flow that's going to come out from this coming few weeks. But and also for this week, we start to see a kind of a another golden week for the mainland China market, where the local China stock market will be closed for 3 consecutive days, starting from today. Monday, Tuesday, Wednesday. So that could actually perhaps see a bit of profit taking starts to actually take shape late last week on the Hansen Index as well as the Hansen Tech Index. Okay, then for the Nikkei 225 is considered to consolidate for about 8 weeks plus or so already, negative 0.72% last week, versus a prior 4 week average of negative 0.12%. And bear in mind also the Japan stock market will also be closed for their localized holiday for 3 days, Monday until Wednesday this week. Now, moving on to the German DAX. So, if you look at the German DAX, it has been outperforming since the start of Q1 this year. So, right now, it seems to me that it's also undergoing a kind of a pullback or consolidation phase. Last week, negative 0.94% versus its prior 4 week average at 0.90%. All right, so it seems to me that we are now starting to see a bit of consolidation on the German DAX. Now, moving on to pardon me, on the SPX 500, the 11 key sectors. So if you look at the weekly performance, 26th of April to 30th of April last week, energy that I've been keep on mentioning that it's one of the play that we should actually keep in mind due to its potential outperformance in Q2, due to its technical configuration. Right now has started to show signs of revival, plus 358%, one of the top performer for the week. All right, so it actually did a bit of pullback in the later part of the week. If you could see this 5 day price range is now the last Friday close. It actually closed the middle part of the range. So a bit of pullback from its earlier start of the outperformance, but nevertheless, it's still outperforming against the rest of the 11 S&P sectors. Yeah, so keep close eye on this energy sector. So if you recall that in the last 8 week plus or so, it's been underperforming, and right now this outperformance revival seems to be just get kickstarted again on the energy sector. So one that is underperforming will be the info technology at negative 2.12% for last week. And if we stretch it out at a higher time horizon, this is a kind of a running 3 month till 30th of April. Energy, financial, industrial are the actually top performer. These are your cyclicals and value play, which I am still in favor for Q2. Right, not too bad for the information technology sector. For the 3 month price range, it's actually trading at the upper limit of the range. All right, so if we stretch it much further, we'll be talking about year to date since the start of this year till 30th of April. Energy and financials are the top names again. Then we're talking about infotech plus 7%. All right. Okay, now the next key thing over here is how about this? We're now into the mark of this sell in May and go away bad omen. So is it really that bad? Okay, so before we talk about that, let's take a look at some notable company earnings announcement for this week, 3rd of May and 7th of May. So we are now still in the kind of a hit of this US Q1 quarterly earnings. So these are some of the key companies that we can take a look out for this week. ConocoPhillips will be one of the top energy names or the big energy names reporting on Tuesday before the market open. So biotech, we have pharmaceutical or part of this pharmaceutical big names, Pfizer, Tuesday before market open. Then Active Vision Blizzard. So this is kind of an e-gaming company where everybody is talking about the metaverse going forward in terms of the next growth name in the next we talk about 5 years or 10 years down the road. Q1 earnings on Tuesday after the market close. Then for the local guys in Singapore, we have the top two banks, United Overseas Bank UOB, Thursday before the market open. Then lastly followed by OCBC on Friday before the market open, and we end up on the week on Friday. This is the US company, which is one of the big energy stocks, EOG Resources, reporting Q1 earnings on Friday before the market open. So now this is the stats that I prepared for you all guys. So if you look at these stats over here, if closer sell, this sell in May and go away omen or a kind of bad omen. So I want to take a look at. I took at 24 years of the return of SPX. Okay, from 97 to 2020. So what their breakdown is a 1 month monthly return in May, 3 month return from the start of May, and 6 month return from the start of May. So all in all, right, if we will look at the stats itself, the average and the median stats are relatively positive. And what's surprising me is the percentage of positive month. Okay, so for the monthly return of May, right, solely in May itself, 58% is positive. Then if we stretch it out to 3 month return from the start of May, 50% positive, and you stretch it longer, 6 month return for the start of May is 62.5% positive. That means what it means overall, if this stats sell in May and go away is really very bad, the percentage of positive monthly return right in throughout all these years, these 24 years, the number should be less than 50%. But what we are seeing likewise is on the contrary, they are actually 50% and more. So what we could see in this simple statistical calculation in the last 24 years since 1997, this sell in May and go away, it's not really a bad omen after all. All right, so now let's go down into the technical chart that I like to share with you all using our CMC markets platform. From here, so we could see, let me start off with the Philadelphia Semiconductor Stocks Index first. All right, so this stocks index over here is one of the barometer of growth, global growth. So we could see is that since hitting the all-time high of 5th of April, it has been consolidating in the last 4 to 5 weeks, holding above this ascending channel and as well as the 100-day moving average. So the key support to watch on the medium term still remains at 32.50. So I'm still looking for a potential push towards this 48 level. A break above 48 level should take us up higher towards the upper limit of this major ascending channel that is in place since 18th of March 2020 low, acting as a resistance now at 495, which is also a Fibo expansion level at 1.236. All right, now going on to the SPX 500 on the daily time frame chart first. So no change on the daily time frame. Is there any signs of a distribution? No, I don't see any. Still continue to shape higher high, higher low. Intermediate or medium term key medium term support will be at 4110 level, which is the lower boundary of this major ascending channel since the low of 23rd of March 2020, and as well as the 50-day moving average that is sooner or later in a couple of days time will come to act as support at this level as well. No clear we call it we call it exhaustion sign on the daily RSI. So with that, right, if we go to the 4-hour time frame, which is my strategy chart, still recall that last week I have a first resistance or target to watch will be at this 4200 level. So since the start of this week, it actually managed to test this. Pardon me, is on the 29th of April. If we go here on Thursday, it managed to hit 4200 level, printed a high of 4218 before shipping this pullback into the later part on Friday. So no change as it's continuing to actually churn up higher in the series of higher high, higher low. So what I do is that I will actually tighten my key medium term pivotal support for this week to 4110. So 4110, what is it? Is in fact this swing low area of 20th of April to 14th of April. And as well as if I have to draw a Fibo retracement, is the 23.6 Fibo retracement, taking from the low of 25th of March all the way up to the current all-time high level. All right, and also this short-term, okay, this short-term ascending channel support in place since the low of 5th March 2021. So no change. I will actually tighten it to 4110. So as well as 4110 hold, I'm still expecting to shape higher highs to actually target the next resistance at 4280 slash 4300 level. Now moving on to the Nasdaq 100. So going forward to the Nasdaq 100 over here. So Nasdaq 100, still recall that 4040 level was actually my upside trigger level for last week. So actually indeed tested last week at on the 29th of April, printed a high of 40077, but didn't have a daily close above 4040. Then thereafter it shaped that pullback. All right, so indeed this 4040 is still the key upside trigger that we should be looking at. So it has been resistant since 14th of April. Alright, so going on to the strategy chart. So since 4040, it didn't have a daily close above this level, so I would not want to be so aggressive to tighten my key medium term pivotal support. So 13607 remains as the key medium term pivotal support, as long as we need to see a daily close above 4040 to actually reinforce that bullish impulsive up move to target the next resistance at 14,435 slash 14,460. All right, now moving on to the Hansen Index, or the Hong Kong 50 we call it. So same thing, still recall that 29,270, that will be my upside trigger level. So kind of still involving in this impending bullish inverse head and shoulder since 9th of March low. RSI now back to the oversold level again, so still no change. To 8,000 will be my key medium term pivotal support level. Looking for another push up towards 29,270, but we need to see at least kind of a daily close above 29,270 to actually reinforce this recovery scenario to actually hit up towards 30,014 pardon me, 30,140 level. Then thereafter followed by the swing high area of 18th of February 2021. So this area is where the current year-to-date high that was printed on the Hong Kong 50 index before this ongoing close to about 2 months plus of corrective decline that has taken shape. All right, or corrective movement. So that level will be 30,760 slash 31,080 level. Now moving on to the next Asia index that I'd like to highlight for you all will be this Nikkei 225, or the Japan 225 we call it in our platform. So still pretty much unchanged. What we see now is actually hovering pretty close to the lower boundary of this symmetrical triangle that has taken shape since February mid of February, 16th of February. So we call it 16th of February high is 30,000, this 30,716 level, which is the 31-year high of the Japan 225. So it's still evolving within this symmetrical triangle range configuration. So if we recall that in terms of the fractal analysis and the Elliott wave, the 21st of April 2021 low could mark the end of this symmetrical triangle configuration based on the fractal analysis approach. We're talking about the five wave symmetrical triangle approach. We're talking about wave A, B, C, D, E to actually mark an potential end of this symmetrical triangle. So what we are seeing now is a slow churn upwards. So definitely it got to break above this symmetrical triangle range resistance, acting at the resistance at 30,230 level, which is also the previous swing high of minus swing high of 6th of April, 18th of March, as well as 24th of February. So this is a pretty much make or break level to determine our bullish breakout of this symmetrical triangle range configuration. So definitely we need to see a kind of daily close above 30,230 level to reinforce the start of another impulsive up move to take us up much higher towards 31,350 level on the Japan 225. So overall, still maintain that potential bullish bias on the Japan 225 using 38,300, which is this key support level on the medium term as defined by the symmetrical triangle range support for this week. No change. All right. Now, German 30. So on the German 30 index, let's go on the daily chart. So we could see on the daily time frame, no change as we start to shape a kind of a 2 or 3 weeks of 2.5 weeks of pullback since hitting the all-time high of 15th of April at 15,291 level. All right. Yes, pardon me, on the 19th of April at 15,500 mark. Okay, so the RSI still trying to bounce out from this ascending support level. Okay, so still kind of a pullback or consolidation scenario from its all-time high. So no signs of a kind of a major distribution yet. So what we could see last week, we have 15,070. So last week pullback actually stopped at this 15,070 key medium term pivotal support. So still no change. I'm using 15,070 as my key medium term support for this week, looking for a pushback up to retest or to target the next resistance at 15,530 slash 15,580. A break above it could take us much higher towards the top of this ascending channel, ascending channel resistance in place since 1st of February 2021, and also a Fibo expansion cluster level at 16,070. And one thing good about the RSI has started to bounce up from the oversold region, so indicating to us that a bit of short-term upside momentum has started to revive on the German 30 index. So overall, in a nutshell, what we could see is the major indices that I share with you all, the SPX 500, the Nasdaq 100, the Hong Kong 50, the Nikkei 225, as well as the German 30 index. All of them are still holding above their key respective medium-term pivotal support. So in terms of technical analysis wise, the odds of a medium-term distribution, it's still relatively low at this juncture, and we are still expecting a further potential push up from here. So with that, have a great trading week ahead, and I see you next in my next video.